welcome to another episode of Currency Derivatives Classroom. Last week we understood about banks' perspective in terms of participating into currency derivatives market, and now we come to a very important part, and we will see how corporates and SMEs can use the currency futures platform for trading effectively. We have an esteemed panel with us today. We have Mayank Shah, CEO of Anagram, Preeti Gupta, Executive Director of Anand Rathi, and Nikhil Malik, Vice President of Edelweiss. Thank you all for joining us today. Corporates and SMEs are something which this market really is missing at this point in time. Not saying that they're not there, but definitely not as much as one would want to see it. You deal with corporates, SMEs, clients for various other offerings that you do as a broking outfit. When it comes to currency derivatives, do they still are aware? Do they come and ask you what is this all about? Where is the ground reality? Where do they stand now?
Large corporates are definitely aware. They are very well equipped with the dealing into the hedging the risk on the currency side. As far as the SMEs are concerned, definitely there is a lack of some bit of education there. Then the appetite for taking the bit of a step to hedge their positions, to cover themselves. Secondly, I think SMEs are well spread across the length and depth of the country, where the banking is the only channel that they really depend upon. And certain times I think we have found that in the interior parts of the country, till around 1 o'clock in the afternoon, they don't get the quotes from the bank for the currencies. Now in this scenario, it is becoming difficult for the banks to really service these SMEs. For them, it is not a priority customer. Whereas this platform which is being created by the exchanges is really something which is available, which is more transparent, and that is where SMEs are bound to come. But the education is something which is actually currently lacking, and there's a one bit which is required. The other thing, if I may add, is the banking relationship is something which is very important, because ultimately everyone who has the payment, obligations or a receivable obligations, they have to go back to the banks. And once they have the established banking relations for various other things, so naturally they would look forward to the bank to offer the solution rather than going into this platform. Now, if there's an adequate comfort which has been given to the SMEs, at least the decision makers like a CFOs or the people in finance, definitely this platform can really add a lot of values to them in terms of the transparencies which is being offered, the accessibility, and the entry and exit is not an issue, both for the OTC as well as the futures market.
Preeti, let me get you in here and understand, you, as far as your portfolio is concerned, when you're dealing with currency derivatives market or currency futures market, how much portion really would you like to attribute to corporates and SMEs?
I think luckily for us, because our spread across the nation is quite large. So I think just as he highlighted, we are able to reach to the SMEs which are in the interiors. We are able to talk to them. Actually, I think just a comparison of the cost of transaction or cost of hedging itself has aroused a lot of interest.
Preeti, but let's just go into the basics. It's a classroom, so let's understand, when you're talking about the cost difference, what is it that you're really talking about?
I think just simply put is that if you were to hedge with a bank would give you a quote which would include something which is called a spread, the bid-ask rates. And therefore the spread there could be larger depending on the size of the corporate. So therefore, if you're a smaller corporate, you would pay a larger spread to the bank, and there could be an additional markup that you would be paying. However, on the exchange, what you have is the RBI reference rate displaying, which is the best rate possibly that you could get. And to transact is a very, very small cost of just maybe a commission, or which is very, very low, and the spread is, I would say, compared to I think the best of corporates here would get about 1 to 2 paisa spread, and on the exchange you would have 90% of the times you would have a quarter paisa spread between the bid ask. So eventually, when you actually put in a transaction, the effective rate that you get is far better.
Mm-hmm.